Good evening, everybody. This is John Sibyl from Acorn Wealth Corp here, and hope you got a chance to check out Trading Room today. We had an extended Trading Room this evening where we went through everything you need to know about the upcoming market conditions. But for those of you who didn't get a chance to watch it, it is a longer recording. I wanted to just cover some of the highlights here for you. So, the S&P 500 is currently rallying towards a critical resistance zone. So today, open range was set. So what we're looking to see is tomorrow or the next day, whenever it happens, we're looking to see whether the market, the S&P, closes above or below the range that was set on today's price action. Now, this is called open range. It's a smart money strategy we use, and we're going to see if we can close above or below. Is going to indicate where we should continue to go for the rest of the month. So if we close positively, then by the third Friday of this month, the 16th, we should close inside this range or above. If we close underneath this range, then we're likely to close inside this range or below over the next 3 weeks. So very, very important day tomorrow. And as you can see, we're also heading towards this line here, which is the 20-day moving average. And there's the 200-day moving average on the S&P. So there's several levels that we need to break through here in order for this to remain bullish. So it's going to be some work. But it could happen. We've obviously bounced off of support of this channel. So the bullish argument is if we go positively, we could rally all the way up into this zone here between the 275 support and the resistance here from that upward channel we broke down from. That's the bullish argument. Now, the bearish argument is that we have already touched along this support 1, 2, 3 times. So if we reverse and open range is negative, then that would be that could possibly be the end of this upward channel, and of course a break below 260 would indicate a 13% decline in the market. Either could happen. Now, if we look at some of the other smart money indications, high yield bonds is at support. So you can see that we are this strong bounce we've had previously from this level around 84 is exactly where we are now. Now this is also where we potentially have head and shoulder support. So you can see here the left shoulder system, the head, and now if we're going to bounce, this would be where we would bounce from. So high yield bonds are at support. And if we look at the amount of stocks above or below their 50-day moving average, you can see that we came all the way down to this 10% mark, which historically has been where we do get relief rallies in any kind of drop. So even in like the 2015 flash crashes, that's where we rallied from. The market crashed again, and then that's where we rallied from once more. So these levels are going to. We're going to expect some of the stronger stocks and some of the really oversold stocks to get a bit of relief. Now, even if we rally all the way back up to 50%, that still means that 50% of stocks are still under the 50-day moving average, right? So it doesn't mean the whole market's going up, but it means some of the stronger stocks may rally while the weak stocks can continue to drop. And that's why selecting your stocks is going to be very important, and that's what we're here to help with, of course. So we could see a move either way, but certainly I am in favor that some of the stronger stocks will rally here. And we're going to wait to see what happens with open range to see what overall direction the market takes. The other indexes are still under pressure. The Russell 2000 is still underneath its upward channel that it's broken down from. The QQQs, the Nasdaq, is still just kind of been challenged after breaking through its upward channel, and of course is underneath its 200-day moving average. You can see that that's what it's challenging right now. It's at the 200 and the 20-day moving average right on top. And of course, Apple reported bad earnings tonight, was down around 7-8%. I think as much as 8%, certainly 7 in aftermarket trading. So that's the Nasdaq futures are down at the moment. So again, that could help just push the Nasdaq back down underneath its channel line here. So it's going to be very interesting day to finish off the week. Now, stocks to watch on the long side. PLG is one. You can see that PLG is a cheap stock. Now I actually own this already. I bought this around 16 cents. This was an Acorn Alert at 16 cents before and in September. There's insider buying on this one, and it's accumulating right now. It's not looking too badly. Certainly, if you're in now, this is so PLG is not the symbol I bought. PTM is the Canadian symbol. I bought this at 16 cents. It's a fallen angel strategy, and as you can see, the money flow is really good, and it's actually got another fallen angel pattern forming here, which is where you get this kind of downward channel, which has a little scoop underneath it, as you can see, and is just trying to make another run. So I like it as an entry point here. I am already in it, so I'm not going to be buying more. I'm already in it at 16 cents. And if this breaks through 26 cents Canadian, this could really rally. So it's speculative, it's lower price, and on the US side, again, it's the same pattern, same chart, different price though. Again, and the level that would confirm a strong rally would be a break above 20 cents. So possible early entry here, a break above 20 would certainly be a confirmation. DERM has broken above its 200-day moving average for the first time in a while. Money flow is still positive. So this is already an active alert since 10 bucks, so it's done really well so far. Held up really well in the market. If you're not in it already, I would wait for it to break above $14, so say 14.07 for a possible new entry point. The stop currently signal is at 10.87. APRI is for penny stock traders. So if you don't trade penny stocks, you don't like penny stocks, don't worry. But this is an active alert that we sent out recently, and as you can see, there's that pennant that's been forming right there. So we want to see this. This had some good moves over these last few days. Again, holding up well in the market, which is what penny stocks do. They don't really have much to do with the overall market, which is why we kind of like to sometimes trade these in uncertain times. So again, if this rallies, we're looking at a possible target here of 53 to 55 cents. Again, if you don't like trading these types of stocks, don't worry about it. But maybe trying to make a move here. CYH was an alert last night, which we sent out. But then again, for some of you who may be newer, you may not have seen it. But certainly, this was one of the ones we did alert as an entry point. It hit the entry signal today, so this is looking good. And so check that one out. Again, could easily kind of rally up towards the upper levels of $4 to $4.80 as two potential target areas. Looking good so far. All right. Sohu. Onto some new alerts. Sohu, got 4 of them. SOHU. Discussed this in Trading Room tonight. It does have insider buying, and so this could be an entry signal if it breaks above 1933. Again, for the full analysis of all of these, we spent about 5 minutes on each stock. Check out the Trading Room recording. But SOHU could have a nice little rally of a target one of 21.53. Is the first partial profit take, but this could certainly have more momentum than that. So I would look for it to potentially rally even further to 25.93 or even higher than that. So using the target areas to take a little bit of profit and update the stop loss. I would look at a stop signal currently of 15.83, and if you wanted to look at options, you could consider the December $20 call options, which are $1.47, or you could go further out than that, depending on your risk profile. MDCA also has insider buying, possible aggressive entry right here as it looks to break through as it's just currently gone up over the 9-day moving average. A more conservative entry, again, depending on your risk tolerance and your skill level. If you're a little bit more concerned about waiting for confirmation, like the open range to be positive, like we talked about earlier, then there's no problem with waiting a little bit. You could wait for the 9 and 20 moving average to cross. That would be another entry signal. The first target I'd look at here is 336. Target 2 is 393. And if this perchance were to break above $4.50, you could have a very powerful rally indeed. Again, it's going to depend on what the market conditions do somewhat. I mean, a huge sell-off and a break below that channel on the S&P will take almost everything with it. So, but certainly this is a more resilient stock and a good pattern with insider buying. GNMX is a one, of course, that we have looked at before, and as you can see, it's got a few things going on. It's actually got a possible upside down head and shoulders pattern, which you may be able to see more clearly there. So you've got kind of an upside down head and shoulders pattern, which is good. You've also got other systems of oscillation breakouts going on as well. So look, this could be a possible entry here, as it's just broken through that resistance. I'd be looking at a target 1 of 157, target 2 of 173, and a third target of 187. The stop signal there is 114. And that's got insider buying as well. Last but not least, EOLS is a nice downward channel as part of a possible flag formation. So I do like this one as well. There's the flag measurement. There's the flag extension. Okay, so and then from the channel, there's the downward channel. There's the downward channel extension. So you have a target here of the top of the channel. Second target of the extension of the channel, and third target, the flag. So you could consider April $15 calls, which are currently $3.60. I'd be looking at a first target of $22.73, target 2 of $35.73, and a target 3 of $49.33. And I consider a stop of 12.67. Now, again, I've focused on longs only tonight because we already have so many good shorts that we've highlighted. And of course, to check out some of the previous alerts, you can simply go into the membership portal. You will, if you're brand new, you will have received a login username and password sent to your email. And so all you need to do is just simply log in, go to the trading center, go to the trading alerts, and you'll see that all of these recent alerts and so forth will be listed in here. So there's CYH and IDT from last night, for example, and you can go into the chart and you can check out the analysis of what we have drawn on, and you can click the play button to see what's happened after it. So of course, there you go. That's some stuff to check out. These alerts will be added to the portal tomorrow, and will also be there for reference for you. So obviously you can check that out. You've also got these videos that'll come to you to watch the alerts, and you've got a written stock report as well. So, to try and give you as much as possible access to all the information. And once again, as I mentioned in Trading Room, if you haven't done the Smart Money scanning course, we did just record it live last week, which is teaching you the scans to find these smart money trades, both longs and shorts. It is a 3-module course, which actually 4 modules now, 4-module course that teaches you everything from trend line recognition, pattern recognition for smart money setups, how to draw trends, the differences between oscillation and momentum, and then how to scan for stocks where the insiders are loading up or selling off, where the patterns are kind of setting up to be perfect. So it's a very, very, very good course, and we have a promotion on for that at the moment for only 197, and that covers all 4 modules. So you can sign up for that by simply going to let me just put the address on the screen. You can sign up for that by going to acornwealthcorp.com. So acornwealthcorp.com/smart. There it is. So as you can see, you're going to be learning how to diagnose the charts the way that I do. Look at where the smart money is going. Look at the indicators, smart money indicators in the market. Best practices on using the smart money indicators. A checklist to follow every day when you go about trading to determine what to do. So there's a 4-step plan to know exactly where the market's going and what to scan for. How to determine stop losses and entry points. Live implementation. I mean, obviously we just recorded this last week. There's stock setups in there that are looking really good. We ran the scans live and picked out our favorite setups looking forward to the month ahead, and that's where I'm going to be looking for the same scans I'm picking these stocks out with. So um, again, we overview the smart money patterns, why they rank the highest in all market conditions, core characteristics of patterns we're looking for, the difference between oscillation and momentum patterns, and how we use different indicators and exit points and entry points for them. I mean, everything you need to really kind of to go through this. So again, just a summary, it's $197 only, and you will learn all of that. Most importantly, then the scans, how to scan for longs, how to scan for shorts. I mean, it's a really good course. I mean, one of the students today I spoke to said, John, I spent $5,000 on another course about 3 months ago with one of our competitors. He said if for $197, I probably got twice the amount of information he got out of this other $5,000 course, and and he'd already paid for his course 10 times over because his first trade with $3,000 on an option trade made him $2,000 of profit over the last couple of days. That's the kind of feedback we like. That's the kind of experience you can expect. So if you haven't done the scanning course, definitely worthwhile to do it now. Only $197. acornwealthcorp.com/smart. Have a wonderful evening. It's going to be a very exciting month ahead. Welcome to everyone that's brand new. It is a pleasure to have you. And to all our existing customers, well, let's have another great month. Happy trading, everybody.